There are three core principles that I follow when it comes to trading. Number one, keep it simple. Number two, build an unwavering, unshakable belief system about your process and the concept that you're trading. And number three is to build frameworks and structures around that process so that when you show up to trade every single day, you trade with confidence. In this video, I'm going to highlight those three core principles via a training session that I did with my students. Now, it's brief, but it will really help you. Take a good look. And if you enjoy the video, make sure you hit that like button, subscribe, turn on notifications. And until next time, as I always say, continue to trust the process.
Just want to share this with you guys very quickly. In terms of continuations, just as a little lesson here, you're going to be looking more often than not, it's going to be two candle theory approach, NDS approach, whatever you want to call it approach, okay? With the idea, you can do this with a single candle, you can do this with a double candle, right? So there's two ways to approach this. First is if the candle closes red, you expect the next candle to close red, right? You guys understand that simple theory. Then you have price creating the top wick. You're looking for price to obviously show signs that it's failing to move in the opposite direction that you plan to take the trade, which is down, which it did. And then you're just looking for anywhere for a break of a low. So it doesn't need to be perfect. You just obviously consider spreads not to be prematurely triggered in. But you just literally, your sell stock could be here, here. It doesn't matter here. You'll be looking for just that shift in your direction to be triggered into the trade. So this is kind of a continuation off of the previous candle close. You may then say to yourself, well, I'm not personally looking for the previous candle close. It doesn't matter to me. What I'm looking for is for price to just be shifting in the direction I wish to take the trade. So in that case, if you look over here to the left, let's say we identify this wick has been formed, and then you see the candles moving bearish, you can kind of say to yourself, well, look, the structure on the 5-minute time frame, 1-minute time frame is now bearish. Current 4H candle is bearish. It's created a top wick. It's pushing bearish, and I expect it to close bearish, wherever you expect it to go to. And then you can just look for areas like this, right, where you can take the trades. So if you see price creating those lower highs, you see an opportunity. Again, it's the same principle. You're just waiting for price to show you that it's not moving in the opposite direction that you plan to take the trade, and that is a shift in the direction you do wish to take the trade. And then you can take something like this. And we'll take a look at one of Joe's trades in a minute, because I think he took a similar kind of process trade, but for a buy opportunity somewhere. I just saw him post it.
I took a wick and flip at the entry of this candle.
Okay.
If you can set it up exactly how you would take it, I'd like to see. I think it would be the same, but
yeah, we'll definitely look at that. Let me just deliver this message. So something like this. When you take trades like this, guys, remember though, every candle has an average range, all right? So you don't necessarily want to be taking these sells midway or at the end of a push. You ideally want to get in as high as you can. Okay, so that's your continuations. Now, if you see price, as we were studying on the one-on-one session with Nico, pushing into an area, a major wick rejection area, we first observed it around here, if I'm being honest with you. But it didn't give us any signals. It just continued to kind of crash down. Oh, it did give us signals, but it didn't stall. It didn't push in our direction, sorry. Okay, and it continued to move down. So you've got a major wick rejection area here. And then obviously you're looking, this is for reversals, you're looking for price to simply do these couple things. Respond at that level where it fails to continue to push past it to show you that there's a depletion, in this case, in the selling sentiment. And then what you're looking for next is just an area where you can look to place a buy stop so that if price does shift from that level in the direction you wish to take the trade, you can be triggered in with momentum. Okay, and that's a simple reversal from those levels. You can also wait for price. So that's a single candle reversal. So what you'll be expecting is price to retrace its own candle. You guys understand that?
Yeah.
Just nod heads. Yeah. Okay. Then if you don't want to trade single candles, trade the same candles reversals, you can wait for that candle to close. And then what you will do in an instance like this is you will make an assumption that because price is not breaking, the next candle will be what? Hourly candle will be what?
Bullish.
Bullish, yeah? So then what is a development of a candle? Wick first, and then flip bullish and continue. Exactly that. So in this instance, you have the candle close. you have the new candle open, you have price create in the bottom wick, and then you just do what me and Nico did. You just say, this is where I'd be comfortable to be triggered into the trade if price moves in my direction, because once it flips bullish, I anticipate that this candle will continue bullish. Okay. And then you can keep buying from this level if you're not in it, or on the next candle and the next candle, until obviously you have evidence that price is breaking through it and it just invalidates the trade. And you will see up here, it happened all the time. So if we go back to the 1 minute, this was a sell you could have took this morning from this candle based on the rejection. So price pushes into it bullish. It's failing, it's failing, it's failing, as you can see, and set your sell stop. And then you see here, you wouldn't have been trading these, but this just happens all the time. And here are opportunities for you to be taken advantage of. Does this make sense, guys?
Yes.
Right.
Yes.
So now you'll all find your own kind of, you will all find your own process when it comes to trading. So you might, and I was having a one-on-one value this morning, you might just prefer double tops. So price creates that wick, comes back to it, and then you take the trade. Or you might look for the double bottoms, or you might look for the lower high, which is the trend developing, and then you take the sell. You might look for the immediate reversal. You might look for just the immediate wick and then flip. You might get in on the wick, or you might get in on the flip. This is just one point I want to drive home. Guys, you are only ever trading a development of a single candle with the belief that that candle will push bullish and close bullish, or push bearish and close bearish. And I want you to hold on to that over everything else. Okay? And when you hold on to that, it just makes everything easier. All you then do is you just build supporting evidence, and whatever it may be, to give you the confidence to execute that trade no matter what.